Hello everyone, this is John from Art of Finance. Welcome back to our channel. We are with you on 21st of January intraday analysis. Before we starting our video, I will share some news with you and then we will just go on. Alright, the conflict between Russia and Ukraine is just affecting the market, and also there are a lot of other problems. First of all, many people are just forgetting that Evergrande and real estate problem in China has been resolved, and then we are getting closer to Chinese New Year. Government is just pushing that those companies just pay that one, and they don't want any disruption before New Year. That's why they are just pushing them and then helping them as well to pay those debts. We will see what will happen, but those problems are just creating a snowball effect. They are just sweeping the dirt under carpet. That's all the happening. Another problem is inflation in US. Energy prices are just still high. As long as we see high prices of oil, we will still talk about these inflation effect. And then the coming months, we were expecting oil crunch, oil prices will just go down, but it's not happening. Supply and demand side is just not covering itself. We will see what will happen. And this was news. Retail sales in UK, that was the fresh news, and has significantly drop and minus 3.5 in retail sales on December in UK. So people are just not spending their money as they don't see the future bright, and mainly because of these high fuel prices as well, and that's also affecting the spending habits, and then it's keeping inflation high. And then on that inflationary scenario, people are just delaying their needs. That's also another thing. All right, this was the news. Let's start with our charts. First chart is GBP USD. As we said, retail sales in UK has significantly dropped, and it has caused another decline in GBP. Also, dollar index in US dollar is just being more valuable again, and we see this cycle, and it's happening. So it has tested low levels starting from the 20th of December. We have seen dollar index decline from 96, almost 97. It was about to test 97 to 94 until 13th of January. Then what happened? It has made, all right, that's enough, and I'm just rising again. Dollar started to rise, and then right now we see this decline. If dollar index gained the momentum and then just goes up to 96 and 97 levels again with the expectation of first rate hike in March, so we will see lower levels of this currency, just the similar levels of 131. That's the most important thing. So please just watch that, and then this is a really good sell opportunity in the market. You can just take benefit from this sell opportunity, and then you can make thousands from this one. Please just watch that. Let's look at our next chart.
You are ready to win with us. GAN Markets.
Our next chart is Canadian dollar and Japanese yen. Why this one? Because Canadian dollar is just fueled with the growth of US oil prices, crude oil prices. So on recent days, just look at it. Like oil was 87, and then it was testing really high levels. And then last night, oil prices has a significant drop from 87 levels. And during the day it has reached to 86. Then last night it has tested 82 levels. And while it is testing, we have seen significant drops in Canadian dollar and Japanese yen. These are causing declines in Canadian dollar on the future days. Everybody is just complaining, every government is just complaining about these high crude oil prices. So we are seeing the slowdown in economy because of this thing, the sweet spot The sweet spot of oil is 65-70 level. When it just goes higher than this level, price of everything goes higher, and then retail sales drop. When retail sales drop, there will be no need more for more oil, and then there will be a surplus in supply side. That's the sweet spot. So eventually oil prices will just come back to $65 and $70 levels. When it happens, we will see sell effect in Canadian dollar and Japanese yen. All right, people are just betting on the conflict of Russia and Ukraine will happen, and that will cause higher oil prices. That's true. I'm not saying that one, but it's just a temporary effect. In long term, the levels of oil around this price range is not sustainable. I'm saying that a lot of people have died during this pandemic, especially in developed countries. Developed countries are the main consumers of oil, so these will want need this oil. Everybody is just saying that oil just will come back to 2019 year level. That may be true because Africa is just growing, and then those population is just getting into younghood, and then they will just need that one. But the poverty in there is just so critical, so it's not possible to increase that demand just like developed countries. In long term, we won't need that much oil. And another thing is electrification of the cars. Many fossil fuel supporters don't want to see that one, but just look at Shell, BP, Total. These companies are diversifying themselves from oil investments. That's important. Just check it out, and then you will see by yourself. That's why in Canadian dollar and Japanese yen, if that unexpected rise because of Russia doesn't happen, we will see 88 levels again in the coming weeks. That's important. Take this advantage. Let's look at our last chart. All right, our last chart is euro dollar. In euro dollar, as you can see here, the most tested and then the most loved range has been seen again. All right, let me just show you. This range has been traded during all these December, and right now we have seen it spike because of this dollar index decline, but now it's back to its original places. So what happens? Okay, when it just reaches to 96 level, euro dollar is just testing low levels. But when it just comes back to that level, like 95 level, we just see the middle. So in euro dollar, probably in the coming days, we will see a few weeks, we will just see this trend and 113.50 and then 112.70 level will be tested. It will go up and down for some time. But next week's Fed meeting is important. On that meeting, if you just hear that a lot of different saying, for example, like people are just pricing right now with the high dollar index, the first rate hike to be in the March, we will just hear some signals about that one. If that doesn't happen, so we will see another decline in dollar index. But if you just like hear that, for example, market is pricing a 3-year rate hike during this year and one tightening, monetary quantitative tightening in Fed balance sheet. If they just say that 4 rate hike minimum and a few times quantitative tightening, then we will just see really high level of dollar index, and then we will just see lower level of euro dollar, and then we will see maybe 1.10 in euro dollar currency. That's the possibilities. So as long as in this range, you can just buy and sell. When it just hits this point, you can sell, and then when it just comes to the lower level, you can buy on this trend line, and then you can make money. Thank you so much for watching us. We will be together on more news on the week of closure this afternoon. Have a nice and profitable day. Bye.